Yeah, the next question. So yeah, we asked people a question really around the concept of tax awareness, and a significant majority of respondents to our survey appear to indicate a lack of awareness regarding the tax implications of their income and the necessary steps to reduce their tax bills. So only 35% of people filling out that survey reported being confident about what tax allowances were available, which suggests, there's a gap in what we'd call financial literacy here concerning tax planning, tax steps, which probably isn't surprising given that we're not taught about this as doctors. We're obviously taught about the clinical side of things. Nobody's teaching us about finances, but it's really important to be aware of all this sort of thing, because there are a number of allowances and reliefs that can help people to minimize their tax bills, from the rent of room relief, the dividend allowance, capital gains, annual inheritance tax, annual exemptions. There's lots of different things there. One of the key concepts we talk about at Medics Money quite a bit, that it's important for all medics to know about, is that concept of marginal taxation and the various tax traps that any taxpayer can fall into that can then lead to quite high rates of marginal taxation. And we discussed quite a few ways in which you can try and avoid the trap. You can find, again, free resources, podcasts, blogs on our website. We talk about this quite a bit. It's definitely very important to be aware of the marginal tax trap and not fall into it at the very least. But there are a host of other tax allowances and reliefs that you can use to try and minimize your tax liabilities. So it's important to be aware of those. And it's clear from our survey that 2/3 of people aren't aware of those. Yeah. So on that note, let's go on to the final question that we asked about tax. And that was all about tax efficient investments. And again, the data indicates that a large proportion of medics, around a third, are not currently taking advantage of tax efficient investment vehicles, such as the individual savings account, or ISAs, personal pensions where appropriate, or schemes that are a bit more niche, like the enterprise investment scheme or the seed enterprise investment scheme, which you mentioned in the EG bit there. That highlights an opportunity for people there, for improved financial planning to try and maximize their net income. In particular, if you're one of those people that aren't using your ISA allowance, which at the time of recording is £20,000 every tax year, that provides an opportunity to invest and not pay income tax or capital gains tax on any returns that you make in an ISA. So it's well worth doing to maximize your tax efficiency. Use those tax efficient wrappers like ISAs, because any income or capital gains tax, there won't be any tax to pay on anything that's inside that ISA. So quite clear that a large number of people aren't doing that. Definitely worth doing to try and protect yourself from some of those tax liabilities.
Again, just
yeah, definitely.
Sorry, resident doctor perspective. When I'm talking to colleagues, especially younger colleagues, about ISAs, they have this sort of notion that your money is locked away and that it's not easy access, and that's not necessarily the case at all. It entirely depends on the product that you have. So if you get an easy access ISA, that's exactly what it is. You can take out the money whenever you want. There are also newer tax ISA rules that means that you can actually take out the money and then put it back in, so you don't lose the £20,000 allowance. Just you have to read the T's and C's of your product, but it's not necessarily locked away. But however, that's the point about investing, Tommy, that you would like to raise as well. It's investing isn't a sort of quick, you can't just put it in and take it out quickly. I'm not doing that point very well. You might have to do that.
No, I think you were going to say exactly what I was going to say, which is there's actually quite a range of different ISA products. So there's not going to go through them all in detail, but you got lifetime ISA, you got the cash ISA, stocks and shares ISA, the innovative finance ISA. Then you've also got junior ISA for the kids. You've got junior SIPs for your kids. There's a lot of tax wrappers here, which, as Ed said, can mean that you pay absolutely no tax on the gains inside those investments and absolutely no tax when you withdraw that money from those investments. That is absolutely brilliant. And the fact that a third of doctors are not utilizing that suggests that we've got a lot of work to do just on the absolute basics. And yeah, like SEIS is definitely at the more complicated end of the spectrum. But again, a third of doctors not on this. It's concerning. And I guess that kind of leads us into investing if Ed is done. But Okay, on to the next question, which is, do you regularly invest in stocks, shares, or funds? Yes, 43% of doctors do, and no, 57% of doctors do not. I mean, in some ways, I thought this was okay. 50% of doctors are investing. It's quite a broad spectrum of things there, and I'm not sure how those doctors are investing. But yeah, I mean, I guess the wider point is, why do you need to invest? And probably back in the day when you were a doctor, say 30 years ago, you had a gold plated, am I going to say, final salary pension scheme, and doctors were paid historically up to 30% more than they are now. And so you probably didn't really need to worry about much of this stuff. But the game has massively changed. We've got doctors having savage real-term pay cuts still, and at the time of recording, no sign of that being resolved. And so why do we need to invest? Well, there's lots of different reasons, but the primary reason from my mind is that cash is not an investment. So historically speaking, money in the bank has lost value significantly in the long term, thanks to inflation. And I'm going to show this graph just one last time. It's not going to be one last time. I'm going to keep showing it. But it shows that the returns on investing £10,000 in either cash or a globally diversified stock market index in 1998. So £10,000 in cash in 1998 by the end of 2022 would be worth around £7,500 adjusted for inflation. Inflation is the silent killer of your wealth. And that's why, historically speaking, cash has been a terrible investment. Contrast that to an investment in globally diversified stocks and shares. I'm not talking about buying individual shares here and going all in on one or two companies. I'm talking about the only free lunch in investing, which is to diversify, buy lots and lots and lots of stuff, do nothing. If you did that in 1998 with £10,000, in real terms, by the end of 2022, it would be worth £40,000. I have to insert the disclaimer, which is that past performance does not reflect future returns, and you may get less than you got back, and all of those kind of disclaimers, which probably links into the next question, which is, do you worry that investing is too risky or complex? Yes, 7%, no, 36%, and maybe 27%. I remember when I first started investing about 16 years ago now, and it was complex, and it was made unnecessarily complex by the industry, shall we say. And it did feel risky. It felt like I was literally gambling, but I was desperate and broke. So I felt like I had to take the gamble. Ultimately, if you do it right and understand it, or take proper advice from an independent financial advisor, then investing does not have to be risky. And I would argue, if we look at that graph of the returns of cash versus investing, that not investing is risky. And I know that there's been some incentives recently from the government to try to demystify and de-risk investing. Let's see what happens with those. But I think we've got a lot of work to do there. And if you just take one thing home from this, is that historically, cash has been a terrible investment in the bank. Over the long term, historically speaking, past performance does not reflect future returns. A globally diversified stock market investment has outperformed cash significantly. Inflation is literally making you poorer every single day if you're holding cash or cash-like assets. What did I miss, Sarah?
No, you didn't miss anything. It was just, I wanted to talk about the course at this point. I know we're not plugging anything. It's just purely that every time someone has attended our course, they've said that specifically the investing things that we do, because we do lots and lots of investing sessions, we're not just sort of covering one, we go into quite a lot of detail, and their confidence astronomically increases after they've been to those sessions, and they feel a lot more confident doing it. So whether you decide to do a self-help thing, which Dodo, for example, Trading 212 and Free Trade all have free guides online, you don't actually have to pay for anything, but at least you can start to teach yourself a little bit about it. Or you want to come to a course like ours, it's worth just learning, because knowledge is power, and seeing if that changes your mind in terms of the riskiness and how you are going to go about doing it.
Great point, Andy.
Yeah, I mean, just reflecting back actually on I was quite surprised actually that it was larger than I expected were investing. So the 43% are regularly investing, which actually, is more than I expected. And in the context of I mean, we have umpteen debates about the budget going on all the time, probably more than ever at the moment. But one of the things that was debated earlier in the year was the government reducing cash ISA limits because they wanted to encourage people to invest more in stocks and shares because of exactly what you said, Tommy. You know, if we're going to grow wealth in the country, actually just leaving it all in cash probably isn't the best thing to do. So I think it was quite encouraging, and perhaps once the government might be aligned with doctors. That probably my little political comment at that point.
Government aligns with doctors. That could be the thumbnail, although it probably won't get many clicks and quite a lot of hate in the YouTube comments. But yeah, I think, yeah, just look at this, okay? And if you think that investing is risky and cash in the bank is safe, just have a look at that. And it doesn't really matter what time frame you run this over, 5 years or longer. I've got a chart which goes back to 1898, which shows a similar pattern, but over an extended period. So just have a think about it. And actually, in terms of like, when I'm doing something, I'm thinking, you know, what is the return on my time here? You know, so if I listen to an audiobook which teaches me a new skill, it takes me 5 hours to listen to it, and it teaches me a really valuable skill. That's good use of my time. If you can understand investing and learn how to manage your own investments, or simply appreciate that you might need help from an expert independent financial advisor, that's probably one of the highest yield things that you can do. There's so much good information out there. There is some bad information, so just stick to trusted sources like Medic's Money and some of the other things that Sarah mentioned. You know, you got to get on this. Next question surprised me, and I'm interested in everyone's views on this. Do you invest in rental property? Yes, 18%. No, 82%. I'll say why I found this surprising, and then everyone else can chip in. But I thought 18%, like 1 in 5, that's quite high, I thought. And we talked about investing in property a lot. Me and Ed did a podcast about 3 years ago comparing like the best side hustles for property for doctors. And we talked about property, and we said, look, it's got some pros, but it's also got some cons. And the cons are the tax situation is becoming less and less favorable. And that's continued to be the case. You also need a large amount of capital. Like I could start investing in stocks and shares ISA with like £25 tomorrow. If I want to buy a house or rental property, I'm going to need to put some money down. I know there's these no money down things, but come on, we all know about that. But 18% of doctors are investing in rental property. Discuss.
I thought that was incredibly high. I was really surprised by that, especially in the context of some of the other, you know, the number of people that weren't claiming tax relief on their basic stuff. To actually have 18% owning rental property was very high. Maybe a reflection. I think probably the last two slides, so higher than probably investing in stocks and shares on a regular basis, higher investing in property. Maybe a reflection in that people are looking beyond medicine as a way of topping up their income, and particularly a way of saving, and particularly a way of retiring early with the changes in the pension schemes. So I think it's quite encouraging that people are looking to diversify.
Yeah, I agree. Again, you guys, I think 18% was definitely higher than I was expecting. As you say, Tommy, the tax situation is particularly tricky at the moment and getting worse. And there's lots of speculation, which I won't go into, but about the next budget, about what they're going to do with property and potentially national insurance and rental income and all these things that who knows what actually will happen. But yeah, I think, and I guess property, although there's lots of downsides to it, I guess if people are worried about the riskiness of investing, property is seen generally as a little bit less risky in some ways. So that might tie into the previous question that we talked about. But yeah, I mean, 18% of our survey investing in property, that's definitely way more than I was expecting.
And that last point is often given, like, I think my cards are on the table with property investing in that I was an accidental landlord. It was financially terrible. I do own some commercial property, which is financially okay. But people say they like investing in property because they can see it and it feels safe. That is the exact reason why I hate property investing, because if you can see it, its boiler can break down, your tenants can default, and all of the other problems that can happen. You know, I own shares in, for example, Apple, not advice, just part of my globally diversified portfolio. You know, Apple's never going to phone me up in the middle of the night and go, my boiler's broken down. Yeah. I don't understand why people I like to see it, therefore it's safe. How does that work? Don't get it. That's my rant over. Syra.
So our next one, so we asked, what do you save money regularly? And 81% said yes and 19% said no. I don't know what our thoughts are on that. At least the majority of people said yes, which is really nice. We'd love it to be 100%, obviously. But I think when we say saving money regularly, what does that mean? I'm hoping people are at least putting something away in their emergency fund, which takes us on to the next bit, which is, have you got savings set aside that would get you through a difficult 3 months? Now, this was more. This was 24% no and 76% yes. And in our course especially, we do bang on about an emergency fund and how important that is, especially because we can't depend on our doctor's salaries being the only source of income if something goes wrong. And so putting away an emergency fund in an easy to access place is something that we find is really important. Some of the places that we've discussed again are things like just easy access savings accounts or offset mortgages, which is Tommy's favorite, which I think is a really, really good idea. But the point of it is it has to be liquid. And I think sometimes people worry that if they put a large amount of just cash, which is taking us back to the investment point, that they're losing out on this investing opportunity. But actually the money, the purpose that money is sitting there for is to get you through a difficult 3 months that you haven't anticipated. And so actually having an emergency fund is really, really important when you're considering your overall financial health.
Absolutely. I think there's a few questions that link to this later on, which reflect the kind of state of medics' finances in 2025. But 1 in 5 not saving regularly, and a quarter don't have enough money to get through the next 3 months. Yeah, if people thought that medicine was well paid and doctors were rich in 2025, here's a good chart to slowly read and digest, because I think that quarter and that fifth, in that fifth and quarter, I think there are some people really struggling, which is really, really sad. But that is why we're here, to try to help those people, which moves on to the next slide. Syra.
Do you have a monthly budget is the next question. I'm really sorry. I'm going to jump back to the last point just very quickly. Recently had a colleague who basically, we've just started our new jobs. It's August, it's changeover period, and payroll is inundated. And she got paid £300 in August because of errors to do with payroll, which means she didn't have enough money to meet her rental costs and her living costs. But she didn't have the backup that she needed to cover those. So it was a mad scramble of trying to get something, some cushion in there. And she ended up borrowing money from her family to do that. So this is, it's not just sort of something terrible is going to happen and therefore you can't work and that's why you can't have the safety net. It's something as simple as payroll getting your pay wrong. And then that's it. You've not been able to meet your obligations for the month, which is why this emergency fund is so important. I also don't know why, if you're watching, my room is gradually getting darker and darker and it just feels very ominous right now. The weather's not that bad.
Summer is over, but not to the degree that it is. You've moved house, Syra, so we know that the weather out east at the moment is not as good as the weather down south.
Yeah. So that was a point about why emergency funds are important. They're not just for big life events or big horrible things that may happen to you. Minor things like payroll. It's not even minor. Payroll getting stuff wrong and then it takes forever to fix. Okay, so the next question is, do you have a monthly budget? And this was slightly less close than Brexit. So yes, 45% and no, 55%. So well done. Yes, 45% of you, brilliant. And 55%. What are we doing instead of having a monthly budget? It would be really useful to understand. I think maybe we can add a question in our next survey to understand that. But why is budgeting important? And I know budgeting, if you hear the word, you might shut down, your eyes might roll to the back of your head, and you might not want to hear about this. But actually having a monthly budget is how you're going to be able to maximize your investing and your saving. Because if you know how much you've got to spend and you know how much money you're getting in, then you know what you can comfortably afford to put away on a regular basis. So without budgeting, might be, this is just a generalization here, but you might be going, okay, money's coming in, I'll pay my obligations, and then I'll do all the fun stuff that I want. And then whatever's left over, brilliant, I'll put that in an easy access savings account if you're one of the 4 and 5 who actually did put some savings away. However, on our course, we actually teach you how to do budgeting so that you meet your obligations, you then meet your savings goals, and then you have everything else to have fun with. And actually doing it that way means that it's less stressful. You're more likely to go from month to month being more comfortable with what you're doing. And you're also maximizing how affordably you can invest and save. All very, very important when it comes to your financial mental health. So please do have a look at budgeting, find a way that works for you. There's loads of stuff online about, one of the rules is, for example, 50-30-20, which is 50% needs, 30% wants, and 20% savings, which is awful. But not every model is going to work personally for you, which is why having a personal budget, which is how we teach you to do that on the course, is really, really important, especially because our needs have definitely taken up a larger proportion of our take-home pay than they used to previously. And then that takes me to the next question is, do you sometimes impulse buy while shopping and later regret it? And I thought that was a really good question to put in there, because mine would be yes to everything. And I'm terrible for this. Aldi middle aisle is my nemesis and best friend.
So I can't believe 59% of people answered no to never
That is a
impulse
lie.
buying.
That is a
Maybe
lie.
they don't regret it,
Absolutely.
Andy. The question says, do you sometimes impulse buy and regret
Yeah,
it?
but
So maybe they don't regret it.
Surely in life, you thought,
I shouldn't have done that.
that's the
Buyer's
shirt
remorse.
for me. I need to wear it and get home and think, no, maybe not.
Yeah. So 41% said yes, 59% said no. 59% of you are, I don't know how you're doing this, but you need to teach me a few things. And so the thing about impulse shopping and later regretting it and going back to the budgeting thing is that we teach you on the course how to do these little simple tricks. There are these mental tricks that we teach you on how to reduce impulse buying and then be able to actually include fun things in your budget. When we say budget, we don't mean stop having fun and life sucks. We mean knowing what you're doing, why you're doing it, being more mindful about how you spend your money and what value that brings back to you. And that's what we go over in the course. So yeah, 41% of you, I totally relate. I'm terrible for this as well.